What is up, everyone? Welcome back to today's market recap. Today was a no news Monday. It was August 4th, 2025, and there was very interesting price action, a lot to look at. So with that, guys, if you're new to my channel, I cover the market every single day, covering real trades you can take on NQ futures to make real money. If you guys like that type of content, definitely consider leaving a like, subscribing, following me on Twitter, and checking out my completely free Discord. The link to that is in my bio. All right, let's take a look at price action. So last week we left off with us running down to these lows. And if you guys remember me talking last week, these are essentially going to be this is a huge liquidity pool, right? There's a whole bunch of stop losses below these lows, right? Why? Because look at how they look, right? It's just a giant range. So right below old lows, there's going to be stop losses. And so you can see we come down to these low resistance lows, bang, we hit them, we react off of them. Now, to be honest, I was kind of expecting us to drill a little bit further down, but it kind of makes sense because we do have this 4-hour for value gap here, which is also a 4-hour VPR. So anyway, dropping down to the lower time frame, we had that 4-hour gap, and you can see we get an aligned time frame changes state of delivery. So right here, I'm going to pull this model out. We had this 4-hour, 15-minute model, and I framed this from essentially right when I got on the charts in the morning. I noticed this 4-hour gap. I noticed this SMT. There was SMT with this low with YM. We get 15-minute change state delivery. You'll also note here, this is a break of structure, break of this high. So what is this? That's our 2022 for value gap on the 15-minute, and it's also there on the 5-minute. So notice how these models will overlap with each other, right? We have our flow state model, which is higher time frame gap, aligned time frame change state delivery, and up to that 4th standard deviation, and then also liquidity sweep, break of structure, fair value gap. That's our 2022 model, and you can see that's respected as well. So we have both of these models essentially drawing price back up towards the high of this range. And so you can actually think about this range as a giant 4-hour CRT, and I'll show you what I mean. So if you guys don't remember what CRT is, it's essentially how higher time frame candle closures can tell you the bias, right? So we have a range of old down close candles here, right? This is a giant range of down close candles. We have our key level here. This 4-hour candle, pay attention to it, right? It sweeps the low and then closes back within this candle's range, and also just all these candles in general. Why is that significant? Well, it can allow you to get a lower time frame entry on the next candle to go target this candle's high. And that might not make a ton of sense right now, but the more you look at these situations where you have a whole bunch of down close candles and then we sweep out a low and then close higher, the more you're going to realize, oh wow, this is really good for lower time frame bias, right? Whole bunch of lower time frame candles or higher time frame candles, sweep out a low, close higher. Now our lower time frame bias is bullish back up to those 4-hour candles highs. And so same thing with the 1-hour, right? We sweep out that low, we close back within this range. Actually, this is a 15-minute. Right, 1 hour closes back within that range. And also, this entire range here is actually an old session. This is New York AM session. So the high of this session is going to be a really, really nice draw on liquidity. This is really, really good area the market will be drawing. So it's kind of cool because I actually did mark out this model in the morning. See if I can find it. That's the one I did after. This was in the morning, right when I got on the charts. So I got on the charts at like 8:30, and you can see I did have this whole model framed. I did have New York AM as the draw on liquidity. Cool thing about that being the draw on liquidity is, guess what? We had New York AM as the draw on liquidity, which perfectly aligned with our stat map level. Check this out. So look at this. This is I think this is our daily stat map. Yeah, This is our daily stat map distribution level, and look at how it perfectly aligns with that fourth standard deviation of this model, right? It's really nice. Really nice for bias, because it's going to tell you, oh wow, statistically so if you guys don't know what this is, it is statistically on a bullish day, on average we'll manipulate here. You can see we came just short of that, and we'll expand up to here. And you can see having this as like a little bit of a map, as a confluence, could have helped you frame out this model. And you can see this aligned right with that fourth standard deviation. So you can see how this was just a giant buy model today. And then also, you can see this buy model did not end at New York AM's highs, but it actually kept going. Let's see if I can find it. Here it is. We actually kept going all the way up to other old session highs. We kept going up to London and Asia, and we actually, if I zoom out, you can see we actually rebalanced this entire range here. So what I mean by that is, take this range from high to low, and you can see we've actually came back to equilibrium of this range. And I was honestly not expecting that, but you know, that ended up what happened. So definitely interesting, right? And yeah, the key was to have this model framed going into the morning. That 15-minute change state delivery gives you bias, and then if I measure out standard deviations, whoops, that's not what I wanted to do. First standard deviation hit, second hit, third hit, fourth hit. So as far as actual trades go, today was kind of tricky because there's really only one expansion opportunity, and that was here. Past that, personally, I think all this is a lot lower probability. I mean, maybe you find a trade in there, but you'd kind of have to wait until lunchtime, and I was really only on the charts for 8:30 until 11. So for me, there was really only one opportunity, and it was to get in on this. And the thing about this was, I knew we were going to get this move. I knew we were going to get this move higher. And to prove it to you, right? Remember this buy model, right? I knew we were drawing up to New York AM's highs because, once again, 4-hour for value gap, 15-minute change state delivery, liquidity sweep, a break of structure on the 15-minute, and then 15-minute for value gap. It's very obvious the bias was bullish going into the morning. So I was expecting this move up towards New York AM's highs. So I was expecting this move, but if you didn't see there's a couple entries I noticed, but if you didn't see anything specific, it was hard to get in on this move, and so that's why there was no trades for me today. But I'm going to show you how I could have taken a trade if I had been paying a little closer attention, right? The way you could have gotten on this move is actually pretty simple, right? You just have to pay attention to, well, what key level are we within? We're within a 1-hour fair value gap. And actually, not only is this a fair value gap, but you can see if you drag it all the way over to the left, it's overlapping bearish and bullish fair value gaps, making this a BPR. So this is actually not only a fair value gap, but it's a 1-hour BPR. So what does the 1 hour align with for flow state? Lines with the 5-minute. So it's kind of cool because there's actually two different ways you can take this same trade. You can take this, if you want to be extremely aggressive, you could take this lower change of state of delivery. Personally, this one would be a little too aggressive for me, but you could take it, and then you can see we do not hit that low, and wow, that just probably be like 10 to 1, right? Off of that 5-minute change state delivery. But personally, the one that I would like to take would be this one, and I would not take it until we get this obvious close higher, and then we retest it. This is where I would enter right here. Unfortunately, I missed this in the moment, and you know what? Sometimes that happens, but I would have liked to have taken this, and then you can see here that if you have stop loss at the low, and once again there was SMT with YM here. So 1 hour BPR, 5 minute change state delivery, and then once again accumulation, manipulation, distribution. We expand up to that New York AM high, which is our draw on liquidity. And also, yeah, let me see if I can show you some examples of this, right? So here's the lower, here's an image of the lower change state delivery, right? This lower 1 hour, 5 minute change state delivery, you know, the 8 standard deviation perfectly aligns with New York AM's highs. Pretty crazy. Also, we backtest the Jake trades at OTE. It's like the OTE from the body to the low, right? We backtest that perfectly. You see that? Kind of cool. Something, a little bonus thing, right? We backtest OTE from the body to the low. We hit OTE perfectly. And then if you measured out this one, same thing. We hit OTE perfectly. So notice how every single time we map out this model, like so much of the time we'll backtest OTE. So I think that's very, very cool. And as well, there was a 2022 model within here. A few different kinds of 2022 models. One of them was right here, simply on the 1 minute, right? We sweep this low, we break this high. We break this high. And then you can see this is really, really nice displacement. So we know that this fair value gap is going to be very high probability, right? Liquidity sweep, break of structure here. Here's that fair value gap. Very, very nice high probability fair value gap for entry. And you can see we can ride this up for essentially the entire day. That's the nice thing about taking these 2022 gaps is they'll offer insane RR, right? I mean, genuinely, if you just get one really good entry for the 2022 model, you could be set for like an insanely high RR trade. And that's why I really do like the 2022 model a lot, is because it's so simple but yet so effective. And just, as always, scale out. And then as well, you know, this is there's other ways to take this as a 2022 model besides that. There was let's see here. I'm actually not finding it exactly, but there, I think there was maybe like a 3-minute one or a 1-minute one. Yeah, because right here, right, this is another one right here, right? We sweep out this low. Once again, break of structure here. Same thing. There's a fair value gap in discount of this range right here. So notice how these models kind of all overlap with each other. Then a couple of things to note is this new week opening gap supported this move higher. So you can see we're kind of like holding it in the background. I thought that was kind of cool. A little inducement of this low. Let's see here. So overnight in London, we had a couple trades. We had this 2022 model at 3 a.m. This was kind of nice, where it's just we ranged, we aggressively swept out this low, we break this high, and anytime you've been consolidating for a long time and then sweep the low and then break the high, this is going to be a really nice entry. So sweep, break, 2022, and then measuring this manipulation leg, we go up to that 4th standard deviation. You could have also taken this as a flow state, where once again, as well, we go from the statistical London manipulation level to the statistical London distribution level. We range, we pop below the low, get change state delivery. Personally, with this one, I like entering on the close, and so I don't even have my stop loss all the way at the low because I entered on the close, and we go run up all the way to that 4th standard deviation. Then Let's see if there's anything else. Yeah, I think that covers essentially most of it today. Hopefully this was helpful. Let me know how I can make these better, guys. And yeah, I'll see you guys in the next one. Peace out.